Hi guys, welcome to today's session. Today we are going to discuss about corporate finance. What is corporate finance? Why we have to study it? What is the goal of the financial manager? So these three things which we are going to look in the fundamental aspects before moving towards other areas. Finance. This can be classified in three aspects: investment, financing, liquidity, which is investment I, financing F, liquidity L, IFL. This three things is majorly covers the spectrum of corporate finance. Investment and financing is the part of long-term financial planning decision, whereas liquidity, which is talking about short-term financial planning. Investment. What is investment? Investing money, funding. What is business? These two things which we have to state. Investment is we have to choose the best business or project to fund our money. So this is the very important part. Before starting our business, we have to study which is a good business, which is the best project to invest our valuable money, a source. This selection process is the tedious task. This requires most of experience, knowledge, skills, some logical approach. This corporate finance really help us to take decision regarding the selection of the projects. How? There is a technique which is called capital budgeting technique, which has n number of techniques supports to take decision in different aspects in choosing the best project. So this is the fundamental and basic important task. Next, yes, we have decided this is project, this is our business. We know now everything. What is our money? How much is required? How many periods we have to run? All the stories we are aware about now. Then we are moving towards the part of financing. What is financing? Very simple. We need money to invest any project. So we have to find out the best possible sources of money, which is really suitable for our business, right? So corporate finance shows two sources majorly called capital, which can be called as debt capital and equity capital. What is debt capital? This is related to loan-based capital, which is repayable, whereas other capital, which is called equity capital, which is ownership-based, which will not repay again because we will be inviting general public to be a part of owners in the business. So how do we decide which is good for this business? Again, this corporate finance gives us a techniques called identifying optimal capital structure, which will be taking into account the debt and equity and will be analyzing using lots of assumptions and theories, and we will come out with an optimum capital structure which is fit for our business. So now let's move on to the final area, which is called liquidity, which is highly rely on day-to-day activities. This liquidity, which is coming under the technique called working capital techniques or working capital management, highly rely on short-term financial planning decisions, which supports to manage our day-to-day operations in terms of cash and inventory. So after this, let's see why we have to study these things. Very simple. Either you are an education or student, or you may be a practitioner, academician, or investor or businessman. You must know the fundamental idea about, you should acquire the knowledge about the fundamental idea on finance. Why? Finance is the lifeblood of every business. Not only every business, for everybody looks finance in such a way. Right. Okay. So we should have a basic knowledge to manage our finance. How we are going to manage in two aspects, long-term perspective as well as short-term perspective. This comes in the part of planning. So AMP, which gives a clear idea what is the knowledge, how we are going to manage this, how we are going to plan this further with the support of corporate finance. Finally, what is the goal of financial manager? Goal of financial manager or goal of manager or goal of financial management, basically we want to maximize the wealth of the business, firm, corporate. How do we maximize the wealth of the business? This is not only making a profit by way of maximizing the share price of the company. How do we maximize the share price of the company? By the way of taking business in the market in a good position. This highly rely on wealth of the business and value of the business, or you can call it as a value of the firm, which supports to make the maximize the share price of the company. This can be done through lots of market studies, market assumptions, market theories. So the goal of financial manager and financial management is to maximize the share price of the company. So with this, let me end up this session. In the following sessions, let's discuss about market-based assumptions, hypotheses, and theories. Thank you, guys.